Hello, everyone. Welcome. We're going to get started here in just a moment. While we're getting ready and all squared away, why don't you all introduce yourselves in the chat and share with us where you're from? All right, let me just get Ryan. I'm going to get you all squared away here. Okay. So you should be coming back as a panelist, and just let me know that you can come off mute.
Can you hear me now?
Oh, just a moment here. Hey, Ryan.
Yep. Can you hear me now?
Yep, I can hear you. Great. Let me
You
just
want me to
make sure.
turn my camera on or leave it as?
That would be great. Let me just make sure that you can share your screen. There we go. Are you able to turn your camera on?
Not at the moment. It says can't.
I'll get you all set up. Don't worry.
No problems. No problems at all.
Okay, give that a try now.
There we go.
Perfect.
What's going on?
No, not too much.
Happy New Year.
Happy New Year. Thank you for coming. We have tons of people that are so excited for this topic. I'm going to make sure that I hit record so I don't forget.
I think it's already recording, actually. It shows recording on my screen, so.
Okay, good. Very good. All right. Well, I'm going to get us started, and then I don't want to waste a minute because I'm so excited to talk about this topic with you. Welcome everyone to the Real Estate Investor free webinar. A little bit more about us. So our mission is to empower women in real estate to live a financially free and balanced life on their own terms. That's what we're here for. It's what we're all about. We have a very robust community. So we have a podcast. We're in 42 countries. We have meetups all across the country. We have our Strive membership program, which is application only. I'm going to pop that link in the chat if anyone's interested in taking a look. We have our Facebook community, as you all know. We do a bunch of different events. And we have investment opportunities. But I'm most excited to talk about this, which is InvestHERCon 2023. It's 60% booked. We're selling out. Make sure to get your spot. Again, I'll be popping that link in the chat so you can get your ticket now. May 18th and 19th in Arizona. And if anyone's interested in sponsoring the event, so we're also looking for companies to partner with. Level 1 is sold out, but we're still looking for different sponsors to help us bring this to life. So I will pop all those links in the chat once we get kicked off here. And one more important note, if you do want to be a sponsor, we do have on our website a place that you can apply and learn more. So our team would love to talk to you if you have anything that you would want to, any questions or interested in working with us. All right. So I'm going to stop sharing, Ryan, so I can kick it over to you. And I'm so excited to have Ryan here. And we're going to talk all about business credit. So for 8 years, Ryan has been teaching people how to build and structure credit profiles to build businesses, maximize returns, and travel the world for free. So I know I want to hear more about what you have to say.
That's awesome.
Over
Yeah,
to
no, so I appreciate the time and for everybody being on here. And, you know, one of the cool things about this and the whole credit thing is we're not taught credit. And one of my biggest things is if you have questions, don't feel stupid. Don't be embarrassed, because I can tell you this right now. If you have this question, the chances or odds that somebody else has the same exact thought or question is extremely high. And there's not a whole lot to know. Yes, you can get granular with credit, but the whole thing is understanding the basics and the fundamentals of credit, because as you start to build that, everything else just falls into place and it makes so much sense. And that's what I hope for. So I see somebody's from Philly. I'm not sure who that is, but what's going on from Philly? That's where I'm from, guys. And I'll give just a quick little, do you want to just go into a quick background as to how I got into credit and then go into, is that all right, Tessa? Perfect. Okay, so here's how I got started in credit, guys. Back, if you guys remember 2001, I was doing commercial real estate way back in the day. And long story short, what happened was I was about 31 days away from major settlements, and 9/11 had happened. Now, this was before I even had credit or any of that stuff, but I learned then what it was like to not have credit and to have bad credit, because I lost everything that I had, nothing closed, all this stuff. And so I slowly, quickly realized that credit is extremely important for all of finances, whether it's personal finances or business finances. It's extremely important. The problem is we're not taught it. Okay. So it's not taught in school. Most people at home don't teach it or talk about it. And your friends don't definitely talk about it because people, they're embarrassed to not know. And it's time that we stop being embarrassed and we start working together to say, listen, this is such an integral part of all of our lives, whether it's for business, whether it's for personal. Let's start talking about it and stop being embarrassed, and let's start helping each other. One of the biggest things with all of this is that the more you work with each other and help each other, the more fun it becomes. It does become a little competitive because people start comparing their scores, but the more we all start to learn and the more we all start to invest in learning. And that's the whole coolest thing about this organization, which I thank you for putting on. How I got into credit was because for 4 years, I couldn't even get approved for a simple credit card. I mean, there's nothing more humbling than going to a local store, whether it was for like a department store or anything, and you're denied. And it's the worst feeling when you go to get a car. It's embarrassing when you either get denied or you're paying 24% interest, or if you're trying to buy a house and you're flat out denied because you don't qualify. And so that was what the initial birthing of my interest in credit was, and say, okay, well, how do I fix this? Now, the number one thing I want to say about that is credit repair is not the answer. Okay. There are some times when credit repair could help. There are some times when you may need credit repair. I typically say most people, they don't need, unless you are $20,000, $30,000 in debt, credit repair is not going to necessarily help you. And the reason for that is this: your credit score is all about current, open, active accounts. Okay. What credit repair does is gets rid of accounts. What credit building and credit education does is it helps you to invest in new accounts and plant and water those seeds on a continuous, regular basis. So that's what you have to understand about credit. It does take time. That is why it's called credit history. For those of you who don't know, a credit score, a FICO score, takes 6 months to establish from the start. So if you took a brand new person, an 18-year-old kid, which is the age you can actually start to have your own credit accounts, you start at 18, it takes 6 months. Now, there are things you can do to build that. From a quick show of hands, anybody in the chat, if you can, number 1, you know nothing about credit. 5, you know a little bit about credit, and 10, you think you're a master of credit, just so I can have an idea as to what I'm who I'm speaking with here. Okay. My gosh, there's a lot of you on here. Awesomeness. This is fantastic. Okay, so the majority of the numbers that I'm seeing, they're somewhere between the 5s and the 7s and the 8s, and that's amazing. So when it comes to credit, you have to realize building business credit starts with having a good personal credit profile. Stop focusing on scores and start focusing on a profile. What do I mean by a profile? You may have a 700 credit score today, and all of a sudden Christmas happens, or you buy a property or some major investment, you invest in an amazing course or program, and all of a sudden your credit card's maxed out. Even if you pay it in full, you could lose 100 points on your credit score simply by having maxed out credit card. One simple credit card. So it's important to understand it's not just about the score, it's about understanding how to build a credit profile. So what do I mean by a credit profile? This is my personal recommendation based off of everything I've learned in the last 8 years. Number 1, at any point in time, you want to have a minimum of 10 open active accounts. Now you say 10 accounts, that's a lot. This is what what would comprise of 10 accounts. Number 1, you want to have a minimum of 5 credit cards. And I would do it across at least 2 or 3 banks, preferably 3 or 4 banks. And here's why. Have anybody here seen or heard of banks shutting down their accounts and closing their credit cards? Chase, it happens a lot with. Now, Chase is one of the best banks to bank with. It's one of the best banks to build personal credit and business credit with. But if they shut down your account because for some reason they see something that they don't like, you could be screwed, especially because I know people that's all they had were Chase accounts. So you want to diversify your credit investments, meaning have 2 or 3 Chase credit cards. Okay. You want to start with 2 or 3 personal credit cards, and then you're going to gradually grow. But start with a personal credit profile first. You want to have at least one or two other accounts outside of a credit card. Why? This shows account diversification. Diversification means and shows not only can you handle your credit cards, but you can handle different types of accounts and making sure that you pay on time. Payment history, as you know, is the number one most important thing. That's 35% of your score, but you should be doing that automatically, okay? Even if you're making the smallest minimum payment, which I never recommend, make sure you're doing that. So you're building, making sure you have perfect payment history. You wanna make sure that you have diversification of accounts. You wanna make sure you have depth of accounts, which is why you have credit cards, because as long as you pay them on time and manage them properly, they'll never close those accounts. And then obviously, with regards to utilization, you wanna make sure that that utilization factor, they will tell you 30%, you want it to be below 10%. 9% and less is where you actually get points on your credit report. When you hit the 10% to 29% mark, that's like neutral territory. You're not getting any points, but you're not losing any points. And then when you hit 30% and higher, that's when the alarms go off, you start showing up on radars, and you start to lose points. When you hit 50% and higher, that's when you start to actually get penalized. So you know when you're applying for a mortgage or any kind of investments or anything like that, the more of a risk you look to the lender, the less they're going to give you money. That doesn't matter whether it's for a card, doesn't matter if it's for a car, it doesn't matter if it's for a property. The higher the risk factor, the less they want to give you, or the less favorable the loan conditions are, okay? The last thing is with regards to inquiries, you don't want to apply for too many things at one time. One of the things I just talked about the other day is when you're trying to apply for things, make sure you know what your credit profile looks like and do some due diligence first. So that if you are applying for a mortgage, it's okay to apply for, 2, maybe 3. When you're applying for a car, maybe 2, maybe 3. Go to a local bank though, if you can, get pre-approved with them, knowing they have the best conditions or like decent rates, so that you only have one bank pulling your credit. Trust me when I tell you, even if you have, as you know, in real estate, if you apply for, let's just say you go and get a credit inquiry for a mortgage, you can have 2 or 3 banks. You only lose points one time if it's within a 14-day window. The answer is 14 days. As long as you apply to 2 or 3 different banks within 14 days for the same category, meaning mortgage. If you apply for a mortgage, that's one category. An auto loan is another category. Credit card's another category. If it's 3 different categories, you're going to have 3 different hits to your credit. If it's one category in 14 days, it's only going to hit your score one time. All those inquiries will show up, but it's only going to impact your score one time. So build that personal credit profile first. Now, as you move to the business profile, here's what you need to know. Your personal credit profile is going to impact your ability to get business credit initially. Okay. The first thing you want to do is build that solid credit profile, having 10 open active accounts, low utilization factors, get used to paying your credit cards every 2 weeks if you can, because when you start building business credit by paying your credit cards off every 2 weeks, you're going to see they're going to increase limits faster, and they're going to give you higher credit limits out of the gate. Okay. So step 1 in building business credit is having a good personal profile. Step 2 is you want to make sure you open up an LLC or an LLP or any kind of corporation that you can actually operate your business out of. Okay. The next thing you're going to do is you're going to make sure you get an EIN number. Now, the reason for the EIN number is because you want to build credit with the EIN number so that you don't have to build it purely with your social security number. The biggest reason for this is you don't want to have a whole bunch of debt in your own personal name. That's the reason why you have an LLC. But if you have an LLC and you don't establish any business credit with an EIN number, you're never going to get lines of business for the LLC. You're never going to get credit cards in the name of the LLC. And therefore, you're always going to have a personal guarantee. So you want to make sure that you establish the LLC. You want to apply for your EIN number. And then the next thing you're going to do is you're going to open up a business bank account. Now, the highest recommendation I have with business bank accounts is go to wherever you do your personal banking, which is hopefully a local credit union or a solid bank like Chase. You could even do it through American Express. Local credit unions, typically like around here, Truist Bank. I don't know if anybody has Truist near you. Truist is popping up everywhere. And I'm hearing lots of people getting great credit cards and credit card limits, as well as business loans and business accounts, pretty much easier than most other banks, and they're giving nice high limits easier than other banks that I've been hearing recently. Once you open up the EIN and you have the business bank account, that is when you're going to start first with your first couple business credit cards. Now, by having, let's say you have a personal account with Truist, or let's say it's Chase. When I opened up my first credit card, my business account with Chase, I opened up my business account and I applied immediately for a business credit card. I was approved for $16,000 on my first business credit card the day I opened up my business bank account. And the guy looked at me and he says, I don't understand how that's possible. And I said, it's very possible. And I showed him my Chase personal accounts. And he says, oh, you have a whole bunch of business and history with Chase. So that's why from a business standpoint, I did have to sign a personal guarantee on my first credit card. But I was able to get a nice high limit. I was able to use that card the first couple months. And then that's what opens up the doors of opportunity for other banks. I did the same thing with American Express. I had a personal history with American Express. I even opened up 2 business cards with American Express, but I didn't use my EIN number. Now, the one thing that I learned, especially with American Express, is that even if you have a business card, if it is using your social security number, you are not building business credit. So I had to start over those cards that I had for 2 years. When I actually opened up my LLC, I actually had to start over with a brand new account to start building business credit. So all that time, those accounts that I had that were open, I had to close them. So make sure that if you're trying to build business credit, even if your business isn't even off the ground yet, even if you're not making hardly any money, start building your business credit, establish those business trade lines. Again, just 2 or 3. Remember, it takes 6 months to establish a FICO score. So with business credit, it's a very similar time frame. You need to be able to show time. So while you're ramping up, you start your LLC, you get your EIN number, you open up your business bank account and get 1 or 2 credit cards with that bank. And then start to use that for as much as you can, even if it's small, because you're just getting started and you don't have a lot of expenses. This is going to help you build your business credit by establishing history. And it's all about history. Now, I haven't been paying attention. There's a whole bunch of comments. Should I stop and look at some of these comments or?
Yeah, so I'll be your co-pilot and I'll be monitoring the chat for questions. So some interesting ones in here, if you don't mind.
Sure.
One question from Aaron McMillian. Do you recommend getting a DUNS, DUNS number as well as an EIN? And maybe for those who aren't familiar, if you don't mind explaining more about what an EIN is, I think that would be helpful. So what do you think about that?
So absolutely, Aaron. The first thing I would say is a DUNS number is going to be very similar to an EIN number. A DUNS number represents Dun & Bradstreet, and that is one of the platforms where when commercial lenders are looking at you and your history, a DUNS number is kind of like you being established. It's kind of like you having a social security number or you having a driver's license number where they have traceable or trackable history on you. A DUNS number is one of the most prominent tools when it comes to business credit and building business credit. The other account that I would say, other than DUNS, there's an organization, and please everybody write this down and download the app as soon as we do this. It's called NAV. NAV is the equivalent for businesses that Credit Karma is for people. So for people, you have Credit Karma, Credit Sesame, whatever your choice is. For businesses, you have NAV. NAV not only will help you see how your credit score is building and what your DUNS number looks like, it will also offer you opportunities to build business credit through accounts that may not actually be credit accounts. You're essentially just showing that you can pay responsibly on time. It's kind of like if anybody's ever heard of self-lender. Self-lender basically is you paying money to yourself. What happens is you pay money every single month into an account. It reports to all 3 credit bureaus as a personal loan. And what does that do? That creates account diversification. You pay it for 12 months. On the 13th month, they give you your money back minus a small fee. NAV is a similar platform where it enables you to build business credit and helps you understand what's happening with your business credit, both with NAV and even with your DUNS number. That's something I highly recommend that you play with. I just saw some of the guys that get kicked out after get a business credit card. What were the next steps prior to get DUNS? That was really it. Once you establish the business credit, I think that was for Teresa. Yeah, you want to establish the first couple credit cards and then just use those on a regular basis. But go ahead.
Yeah, and one clarifying question, account diversification. Definitely understand that that's important. Can you give some examples of other types of accounts that would increase the account diversification?
100%, sure. So you may have an Amazon account. People use Amazon every single day. get an Amazon business credit card, go to Sam's Club or Costco, get a business card or account. If you shop at Staples or at Office, whatever office supply stores there are, Office Max, Office Depot, I'm not even sure what are out there anymore. I do everything online anymore. These are all different places. Now, a lot of people, they'll say, go to Uline. They'll say, go to Granger. If you don't buy things from those stores, the one thing I'll never tell people is don't ever buy things you're not going to use or need. Don't buy things unnecessarily just to build credit, unless it's an absolute necessity. But again, still find things that you can actually utilize. Don't ever go into debt or buy things that are just going to completely sit on the shelf. There's other ways to do that. So hopefully that answers your question.
Got it. And then can you clarify the bank that you use? You said, is it Truist?
So I use Chase. Everything I've done has been done through Chase because I had a Chase auto loan. I have the Amazon credit card, the Chase Sapphire credit card, IHG credit card, the Ritz-Carlton credit card, and I had Southwest. Southwest was actually my third credit card. They don't fly out of Philadelphia hardly anymore, so I don't use that anymore. I still have it. That card's still open. And that's another important thing. And I want to just, unfortunately, some of these questions are going to cause me to bounce around a little bit. With credit cards, do not ever, ever, ever close credit cards unless you have to. If you have a credit card with an annual fee, for those of you who do or don't know, there's a thing called a downgrade path. If you have a Southwest credit card, then let's just say it's the top of the line card, like which is what I had, because it gives you $75 plus you get so many points. If you're not going to use that credit card anymore, just downgrade that card to the no annual fee credit card. That is the best thing you could ever do because you never lose all those years of payment history that you had. That's one of the most important things to do.
Got it. And then let's go back to your flow and then we'll come back to the chat with more questions, but let's keep going with what your presentation for now.
So ultimately, I mean, that is the presentation. The presentation is to build and establish those cards. Once you establish those cards, then you want to go and apply for a small business loan. That small business loan could be $1,000. It could be $5,000. Well, what do you want to use that for? Maybe you need to buy some equipment. Maybe you want to use that to invest in some marketing. Maybe you want to buy a little software and you can use that small business loan to pay off for the software. Maybe you're using it for an educational program. You could take, I mean, I've had multiple people that have said, can you help me establish so I can get a credit card so I can sign up for this program so that I can learn about real estate, so that I can learn about marketing, so that I can learn about this, that, or the other thing. It's important to establish those first couple trade lines because once you establish the smaller trade lines, then they grow, and they grow. Now, one of the things that you'll learn, and this is what I highly, highly, highly recommend to all people is the more you use credit, the bigger the limits they're going to give you and the more credit opportunities that they're going to offer you. So for example, when you have credit cards like American Express or Discover or even Chase and Barclays, those credit cards, a lot of them, they have what's called learned behavior. So American Express, for example, when you're looking, and I'll just show you, there's two things real fast. When you're looking, this is, hold on. This is an American Express charge card, okay? I don't recommend this card for everybody. In fact, if you do not fly, I don't recommend this card for anybody because it's an expensive card to have. This card is probably one of the best credit cards you can have and you could use if you're building and establishing your business because this card here is going to give you 4 points back for every dollar you spend on the top two categories. So for some people, that may be marketing. For some other people, that may be supplies. Other people, it may be dining. And for some people, it could be travel. If you travel, this is the card, the platinum card. I know this is like the shiny object that everybody talks about. In reality, this is way more of the workhorse. This is going to be more practical, both from a personal level and from a business level. But these are what's called learned cards. This doesn't have an actual credit limit. And that's one of the other things talking about when you're building business credit. You want to use cards more like this is a credit card. There's no centurion in the middle of it. This is a credit card. This has a credit limit. This card here is $16,000. This is a personal credit limit. This here is a charge card. This has no credit limit. So when you're building credit, if you look at credit utilization, this card is not going to help you from the standpoint of when you look at overall credit limits. It's not going to give anything. This one here is going to be $16,000. So that's why it's important to start with credit cards first and then build into charge cards. Okay. Once you have some charge cards and some personal cards that are both credit cards for the personal side, then you move into the business side. And the same thing goes for business. The more you use those cards, when I started off, they gave me a $25,000 limit on that gold card. The limit on this card right now is $100,000. That's a spending limit. Now that may change too. When COVID happened and the economics of the world fall apart, they may change those limits a little bit because they want to just keep their risk factor with you under control. But just realize the more you're using credit, the more you're building credit, the more you're showing credit history, and the more they're going to open up those doors of opportunity. Remember one thing: the more that you can show that you pay bills on time and that you're not risky, the more they're going to give to you. The more you'll get junk mail like crazy, like I do, and the more you can use that credit to use other people's money so that you can invest in real estate, building a business, whatever the case may be.
Awesome. So I just want to ask a few clarifying questions, and then we can maybe dive into the chat and pick up some of those questions as well.
Sure.
Can you explain, for those who aren't familiar, what a trade line is?
Sure. So a trade line is going to be any account that reports on your credit report. Now, whether that's business or personal, a trade line is going to be, for example, have you ever noticed that your cell phone bill and your car insurance don't report to the credit bureaus? They're not trade lines. They're accounts that you have. Your cable bill doesn't report. Your auto insurance doesn't report. Your health insurance doesn't report. So they're not considered trade lines. You want trade lines that when you jump into Credit Karma, and for those of you, just real quickly, Credit Karma is fantastic. The scores may not be accurate if you're looking to get approved for a mortgage, because they use what's called a Vantage Score 3.0 model, which is very similar to a FICO 8 algorithm model. The reason they're so different is because FICO 8 and Vantage Score 3.0, they're looking more at your last 2 years to see if you've been paying your bills on time. That's what happens when you're applying for a $1,000, $3,000, $5,000 credit card or a $25,000 auto loan. When you're applying for a $200,000, $300,000, $500,000 mortgage, they don't care just about your last 2 years. They want to know that for the last 7 years that you've been paying your bills on time and you haven't had any kind of hiccups. That is why they use the FICO 2 for Experian, FICO 4 for TransUnion, and the FICO 5 algorithm for a mortgage. That's what you call a tri-merge mortgage pool. FICO 10T is coming out, and that is going to kind of merge both models together. And I'm telling you now, when FICO 10T comes out, a lot of people are going to get hurt because it has a lot to do with credit utilization. And I don't want to dive too deep into that right now. That'll be a different conversation. So trade lines are accounts that report on your credit profile.
And going over to utilization for a second, I feel like you've spoken to this before. Are there any steps that we can optimize right now? And what I'm thinking of, for example, is if you've been a good customer and you call your credit cards and ask them to raise your spending limit. If you're raising the amount that you're able to borrow to your spending limits, wouldn't that automatically bring your utilization down right now?
100%. That's a great point. So let's say conceptually, you've been using a card. Now, American Express lets you do this every 6 months. Some banks will do it automatically. Charge cards will do it automatically. Credit cards with credit limits, you have to ask for it typically. Now, some cards will allow you to do it automatically. They'll just do it. Like Discover is one of those, again, a learned card. What I would recommend is after 3 to 6 months, you can try it after 3 months. They'll tell you, sometimes they change their guideline on this. If you can show that you've been using the card a lot and that you've been paying it on time, they will allow you to increase that limit. It is always going to be tied to and or relative to your income. And I would tell people, do not ever lie about your income, but you can fluff the number. If you make $47,500 a year, you can put on an application you make 50. Don't say you make $47,000 a year and then you say I make $100,000 a year, for 2 reasons. Number one, if they ever call your bluff, they'll note that account and they'll probably deny you and never give you credit, at least for a while. And number two is they're going to look to see if your spend matches what your income was reported. So if you say you make $100,000 a year, but you barely spend $1,000 a month on a credit card, they're going to look and say, something doesn't make sense. That also leads to another point. You should be using credit for every single purchase. And here's why. Number one, if you're not using credit, you're not building credit. Number two, when you're using credit cards, if God forbid somebody steals your numbers, you're not responsible for the purchases from the fraudulent activity. If somebody goes and makes a $750 purchase, like happened to me, and they pull that money out of your bank account, it took me 3.5 months to get that money in my account. Even though the bank knew it was fraudulent because they could tell, they still held my money for 3.5 months. With a credit card, it's happened to me 3 times. And the last time was great. Somebody bought something overnight. I called American Express and I said, I don't recognize this transaction. And they're like, okay, you sure it's not you? All of a sudden I got another transaction while I was on the phone with them. I said, oh yeah, you see that Sears.com charge? That's not me either. And she's like, oh my gosh, that just happened. I said, yeah, that's not me either. Boom, just like that. Card was closed. The card was closed, not the account. So they kept my history. They just canceled that card. And in 48 to 72 hours later, I had a brand new card on my doorstep. So that's one of the reasons why you definitely want to use credit cards for every single purchase. And by using them more, they will allow you to increase those limits. The higher the limit, the automatic lower the utilization, which was the original point of your statement there.
I also really love what you said about never closing an account unless you have to, so you can keep that history, but there are still ways, like if there are fees or different things that you can call them and have them bring you down. So you still have history, you still have the card, but you don't, you're not paying unnecessary fees. So I thought that was a really good tip that you shared.
Yep.
So coming back to the chat here.
I also want to say with regards to credit cards, real quickly, just because I see there's a lot of, will it screw you up if I have people put numbers in here? Do you like that, or is that screwed up? Because I don't want to get rid of all your questions. All right, I want everybody to do it. If you want to build credit for kids, I'm telling you right now, invest in simple, no annual fee cashback credit cards, because at the age of 13, if you want to help your kids build wealth and buy real estate for themselves, at the age of 13, you can add them to one of your credit cards as an authorized user with most banks. Don't do it before 13 because they tell you not to, and there's no chance that an 8-year-old kid has 10 years of credit history. But at 13, you add them to a card. By the time they're 18, they're going to have over 700 credit scores, assuming you manage those cards properly. And now you don't have to co-sign for anything for your kids. That is the greatest, best tip you could ever teach your kids.
And that card is in their name?
So no. So the way it would start like this. Let's just conceptually say it. I have a card. It's called the American Express Blue Cash Preferred Card. That card I've had open for probably like 6 years now. I don't ever use that card. I refer that card a lot, but I've added all 3 of my nephews to that credit card. Well, that's not true. I've added 2 of them because 2 of them are 13 and older. And what's happened is I'm going to add the 3rd one. But what's happened is now my nephew who just turned 18, he already has a 700 credit score because he has history because of what I gave him. And then I told him to open up his own credit card, which was a secure card. And one of the best secure cards for your kids is going to be the Discover. Any kind of payment history at all, Discover's typically going to give them $1,000. And it's not one of those like where they're handing out a college
one
campus.
second, unless that was just me. Do you mind repeating what you just said? And then also, what's a secure card?
Sure. A secure credit card is a credit card that basically you're prepaying for because they don't want to gamble with you if you have no history. So for 6 months, you put, and I recommend this for most banks. Well, Discover, they're going to give you your money back, but don't do more than $300. Take $300 and you're going to basically deposit that to the credit card company. Now your credit limit's $300. You're going to use that $300 and then essentially that's your credit limit. And that's what they're going to let you borrow based off of, but it's your own money. Now, what I recommend in the beginning to help keep low utilization, and there's this whole thing about reporting date, and I can go into reporting date because that's kind of like another whole conversation that's really what controls your credit score from a credit card standpoint. But what happens is you want to get used to paying your credit card off every single week. By paying your credit card off every single week, you'll never pay interest. Your debt will never run away from you. You'll never miss a payment. And then the more you pay, the less risky you are, the faster they're going to increase your credit limits automatically. But a secure credit card, they're never going to increase your limit until you either hit that 6-month mark and they give you your money back, or you put more money into the account. Does that make sense?
Yes.
So that's how you want to get started with regards to kids. If you make them an authorized user, that shows payment history. So the day they turn 18, they should now have some sort of credit history. So now at 18, they can apply for their first secure credit card. And you can use tools. I have a whole digital classroom, an online classroom where people can learn whether or not they would qualify without actually incurring an inquiry. And typically one of the good things about American Express is if you apply and you're denied, they won't actually give you an inquiry. Plus, American Express is one of those where every 14 days they're running your credit. So if you have a credit card with American Express and you apply for another one, they won't typically run your credit or give you a hard inquiry because they already have your credit file. Every 14 days it gets updated.
And just to clarify, so an inquiry, especially a hard inquiry, is when they do a hard pull of your credit, which could ding your score a little bit. So that's why we want to avoid that. Is that correct?
100%. So again, having 1 to 3 inquiries per 12 months is not bad. They stay on your credit report for 2 years, but every time you have a new credit inquiry, it's going to cost you 5 points, which even there, again, it's not the end of the world. When you look at a credit inquiry, your score from 300 to 850 is 550 points. 5 points off of your credit report's not that bad. You just don't want to have 5 or more inquiries showing, because then it looks like you're desperate, and then banks get worried that you're in a desperate situation, which then increases that risk factor and then lowers your approval odds.
Yeah. Bringing us back to, there's a question in the chat. Is there too many credit cards? Because I know that you recommend 10 accounts, 5 credit cards across 3 to 4 banks, ideally. Is there a threshold where it's actually, kind of a bell curve where then it's hurting you if you have too many?
Yes, that number is where you lose control of being able to manage them properly. I have 20, I've lost count, but I think I have like 23 or 24 credit cards. And the majority of my credit cards sit in my safe. So I have, if I look at my wallet right now, 1, 2, 3, 4, 5, 6, 7. I carry 8 credit cards. I use almost all of them except for 2. The one I don't use because it's a business platinum. I just have it in there in case I need it for booking travel. The other card in there is a Chase card, which I only use in the event that American Express isn't accepted. So the reason for that, I have a Costco credit card. I have multiple, and with building credit cards, whether it's for personal or for business, you want to build what I call trifectas, or not what I call, but that's what the industry calls. You want to stack cards. Okay. Let me finish this answer. So to answer the question, you can't have too many credit cards. I'm sorry, my brain, Holly on this thing knows me personally. I know Holly's in there. I saw her name. My brain goes like this. So like the second I think, like ADD is the worst, but it's awesome. You can't have too many credit cards as long as you can manage them properly. Now, what you want to do is not have a Chase, an Amex, a Discover, a Barclays, whatever, Bank of America. You don't want to have all these cards and try to build points with all of them. And here's why. It's like trying to fill a bucket. If you're trying to fill, you have 3 buckets. If you're trying to fill a bucket so that you have water for whatever reason, if you're putting a little here, a little here, a little here, it's never going to fill. If you take 3 faucets and put them into 1 bucket, a dining card, a gas and grocery card, your travel card, your business cards, and you have them all funnel into 1 bucket, it makes it that much easier to fill up that free travel bucket. So what I mean by that is I have personal cards. The clear card that I showed you, that's a credit card, that earns American Express MR points. The gold card, MR points. The platinum card, MR points. The Blue Business Plus, this is 2% on all purchases up to $50,000. MR points. I personally have chosen, even though I have Discover, I have Barclays, I have Chase, I have all these cards, I prefer to go after American Express points because I use American Express points to travel internationally. You can do it domestically. The best value or bang for your dollar is going to be international travel. That's why I do that. So what I do say is when you have your 3 or 4 banks set up, you have your Amex, your Chase, have 1 card with all of them, start narrowing down and saying, where do I want to put the majority of my spend? Now, for cash back, that doesn't matter. You can have a Citi double cash card. You can have a Chase Freedom Unlimited card. You can have a Discover It rotating category card. You can have whatever cashback card you want because it's cash back and then it just goes into paying off your bill or whatever the statement is. When you're trying to build points, like for example, I just got married in October. My wife and I, we went to Italy. $1,700 of airfare, we paid 0 other than taxes. And the reason for that is because for 4 years, I've been building up all of my MR points, and I still have over 600,000 points. You could pretty much go anywhere in the world with 600,000 MR points. So that's why when you're building your credit card portfolio, you want to make sure that you're stacking. If you prefer Chase and you like the ultimate rewards or the UR point structure better, go for it. Some people even argue and say Chase is better or easier, or your dollar goes a little further. If you like American Express, go with American Express. At the end of the day, they're all credit cards, they're all charge cards, whatever. It's whatever you feel most comfortable with.
Awesome.
And when you're deciding on credit cards, always ask yourself 2 questions. Where do I spend my money? And what do I want in return? Do you spend a lot on gas and groceries? Do you spend a lot on eating out? Do you spend a lot on travel? Search cards that are based on that, but then base the cards also on, do you want cash back? Do you want airfare? Do you want hotel stays? What do you want? Or do you want just general travel? I never recommend hotels or airline cards unless you know you're flying American Airlines 100% of the time, or you're staying at Marriott 100% of the time. It's more universal for you to have American Express and transfer to partners, or have Chase and transfer to partners, because once it's there, if you have like a Marriott card, you're not transferring that a lot of times to, airline carriers, and Marriott's not going to let you transfer that to a Hilton credit card or something like that. So make sure if you're building points, it's always better to build MR or UR points and then transfer those out versus having your United credit card and trying to move that to American Airlines. It just doesn't work.
Got it. And can you clarify for me? So it makes sense that when you want to build a business credit profile, you kind of start on the personal side of things. And I think you've shared great tips on how to optimize for that. Then when you go and you have a business charge card, and there isn't necessarily a limit. So I would imagine that you're not really having that factor of like utilization, for example. Like, what are the different things from the business credit side of, like, how do you optimize the business credit? Or is it still maintaining good personal credit, obviously, habits and paying your bills on time? But is there anything else from the business credit side of things to improve your profile? Does that make sense?
100%. The number one thing I would tell you, and this is what I've learned, and they don't really even tell you this or teach you this, but I have seen in other forums or chat groups that I'm a part of, by paying your credit cards off every single week or every 2 weeks, it diminishes your risk factor significantly. And I've seen people get thrown so much more opportunity from a lending standpoint because of that. I was mentioning 10T, FICO 10T, and how that algorithm works. And basically, if you look at, I'm going to kind of go into utilization and credit cards for a second. So this is the first of the month. Okay. Let's just conceptually say you spend $250 every single week. At the end of the month, that's $1,000. You're going to get a credit card statement for $1,000. You spend $1,000, make a minimum monthly payment of $35. Never, ever, ever do that, because you're paying interest. I had a guy today, he's got $35,000 cash in the bank. He's got 7 credit cards totaling about $8,000 worth of total debt, and he pays them off monthly. I said, that $35,000 in the bank is making you less money in interest for the year that 1 month of credit card interest is costing you, because you're getting 0.25% interest on that $35,000. You're paying 17% interest on the credit cards. By paying the credit cards off every single week or even bi-weekly, a couple things are going to happen. Number one, the bank's going to look at you and say, wow, this person's really responsible. Let's continue to throw money, or let's increase those limits. The second thing is, when you look at the utilization standpoint, it's always going to report a lower balance. Even if you paid that credit card off in full, the fact is you reported a high balance. This is why with all of my clients, I teach them 2 days before the reporting date, which typically is the last day of the month. So if it's the 1st or the 30th, on the 28th, pay that card to zero. I don't care what the balance is, pay it to zero. Now, it's going to report either zero or maybe 20, 30, 50 bucks that maybe you went to the store, you had to buy something, or you had an automatic payment come through. It's going to report you owe $25. 2 days before the reporting date, you're going to pay that card to zero again. Because, I'm sorry, 2 days before the due date, you're going to pay that card to zero again, because you want to make sure you keep in that habit. And that way the debt pile never runs away from you. Because I'm telling you, just one simple month. When I got married that month, I had a $13,000 charge that hit 2 days before my reporting date while I was at my wedding. That thing reported my credit score dropped 50 points. Because not only was it reporting a high balance, it actually put me over my limit, and American Express approved it just because they knew where I was, and I had told them, and I didn't realize I was getting charged that. But because it did that, my score dropped 50 points. Well, it's okay if your score goes from 813 and drops to 750 or 763. That's fine. I have people that are at 650 and it drops 90 points because they don't have the credit profile. So you want to make sure that you're paying those cards off at least every week or every 2 weeks, just to help keep them nice and responsible or reasonable on the business side as well. Because the more you do that, the more they're going to give you other business loans or better business credit.
Brian, so it's helpful. Thank you. How can we leverage automation to make this easier? Because you just mentioned that you have over 20 cards. So is there the settings in the bank? Are you able to, create these settings to do this automatically?
So most banks, they're all going to offer what's called auto pay. In the beginning, you can absolutely set that up. Here's the problem. If people have auto pay, they're not automatically thinking every week, I should be monitoring my credit. Like I tell people, you should wake up before you check Facebook, Instagram, TikTok, or the weather. You should be checking your credit score and your bank statements or your bank account balances. That's the first thing I do every single morning. In fact, I even have a spreadsheet where I started tracking them. I learned from a guy, his name is Alex Hermosi. The guy makes like $10 million a month. He literally said when he got started, every single day, he would just track his numbers and it motivated him. Because for some people in the beginning, when you have nothing,
manual then.
What's that?
You want it to be manual. There's a benefit to it being manual in some ways, it sounds like.
It's kind of like going for a run every day, doing push-ups every day, taking a cold shower every day. When you do it regularly, it doesn't become work anymore. It becomes habit. And then 30, 60 days, that habit now becomes natural routine. So I do mine all manually. There are some people that will put things on auto pay. I do have 2 or 3 cards that are on auto pay, like my State Farm credit card. It pays my auto insurance and my homeowner's insurance and whatever my umbrella policy and everything. I don't ever pull that card out. That card sits in my safe, but every month that card gets charged and every month that card gets auto paid. That's where I use auto pay. For things where you may have 0% financing, you may want to monitor that where that's not on auto pay. But if you know you're breaking it down, you could set up auto pay because you don't have to worry about it that way. I just think that that's the less, hands-on you are with it, the more you have a tendency to forget or miss things.
At least in the beginning, that makes sense.
Yes.
It makes sense to be building the foundational good habits.
It's not a bad idea to set it up for auto pay the minimum in the event that you forget in the beginning. That's not a bad thing to set up. But I definitely think people should get more into the habit of every 2 weeks just being like, okay, boom, let's pay my Amex cards, let's pay my Chase cards, and then it's done. Plus, you get an idea for what you're spending. Like, it's good for you to look at your statements because you want to see, do I have, because if you're not monitoring, and that's another thing, I set up alerts on any of my credit cards. $1. If $1 is charged, I get an alert because I want to know where's my money going.
Yeah.
And if you're not paying attention, it's easy for, subscriptions to pop up that you forget that you're paying $9.99 for. And then a year and a half later, that happened to me with Great Adventure. I forgot all about it. I was paying for a kid's season pass and we hadn't even talked to the kid in a year and I was still paying for it. So.
Yes, definitely. You're just making me think of I have these annoying subscriptions that I know I need to cancel.
Yeah.
Good reminder. Tactical question here for a second. So we have someone in the chat asking, how long after getting the business credit card do you wait to then apply for a small business loan, like what you were talking about earlier?
So that's a good question. And I would say, ask the bank because you can probably start with like a $500 loan. I'm pretty sure any bank's going to give you 500 or 1,000 or maybe even up to $5,000 loans with no question. And one of the other things you can do is go online, and somebody could write this down. SoFi is for personal, but I think they have business as well. A lot of these banks and these credit card companies, they'll let you pre-qualify yourself based off of income, based off of soft pulls. Soft pulls are really, really good because they're not actually dinging your credit, but they're still seeing inside. They just don't see everything. And it may only be one credit bureau. So soft pulls are really good tools, and you should look at banks that do that. Like American Express now offers it. They call them offers to see what they're offering you. If you go to discover.com, Discover to me is one of the best because if discover.com approves you for a credit card, pretty much any bank's going to approve you because Discover's harder to get than a lot of other banks. They're way more conservative. But Discover will give you like an option where it'll say, check what you qualify for now. It'll tell you if it's a regular credit card or if it's a secure credit card. And if it says you're not approved for any of those, don't apply for anything else because you're not going to get approved, flat out. But at least use those tools to say, hey, do I have a high chance or propensity to get approved? The same thing goes for when you're looking for bank loans or for business loans. Don't necessarily wait. Just remember, time is like right now, that second right now is gone. That's gone. That's yesterday. So yesterday, if you talked about, we're thinking about credit, but you didn't do anything. You didn't establish that trade line. You didn't open up that that LLC. You didn't get that EIN number, and you didn't open up that business bank account. For business credit, it's all about the business bank account and the EIN number. So don't waste time. The next thing you know, 2023 is going to be over. And this whole webinar was going to be a waste for you. Don't do that. Now, such an amazing time while everybody else is afraid to buy real estate. I'm telling you now, more investors are buying real estate than ever because they don't care about the interest rate. They pass that all down to the consumer or to the renter. That's why you don't want to waste time.
Awesome. I want to double click on something that you just said. So the EIN number. So is that, because you did mention something before, pretty much like, what are the questions that you need to ask to ensure that you are building business credit and not accidentally building your personal credit? What I mean by that, I think you mentioned that there's a social security number associated with it and the EIN. It may not be building your business credit, or you want to only have the EIN. I just want to get a little more clear on what are the questions to ask? How do you make sure that you are building that business credit profile?
So the first thing you want to definitely say is, will this report to my EIN and my business credit profile? You have to ask them that. And I'm going to tell you this right now. Unfortunately, some of them don't even know.
Yeah.
You have to do a little bit of your own research. And you know, everybody in here, obviously, if you're part of this group, you're doing work. And so like, I applaud you for that. Continue to do work, continue to learn, continue to do a little bit of your own due diligence, just like in real estate. Research the bank that you're going to, because some people, they'll go to like Third Federal, or they'll go to, you know, First Bank of Omaha, whatever the case may be. Other people are going to Bank of America and TD Bank. They're all fine. Okay. Yes, some are going to be better. I'm going to tell you, credit unions are going to be way better with personal loans, and with like specialty loans, always go to credit unions for that because they're way better when it comes to that stuff. But when you go in there, have done a little bit of research. Like when I went and got my first credit card, I knew exactly which credit card I was going for. There were 3 Chase cards that I was going for. I did my research before I went in there. I knew I was going to have to give my social, and I knew because I had no business credit, they were going to run my personal credit report. But I also knew that I was filling out that application with my EIN number as well, so that it will report to my DUNS number, and so that it will build my business credit as well. But do your own research and make sure you ask them, does this report, will this report? Just like I found out with American Express, because I had a business credit card, because I didn't have my LLC and my EIN number established, it was reporting to it wasn't even reporting to my personal credit. They were using my personal credit to, you know, approve me for my business credit, but it wasn't building my business credit. I had to start that over and just use my EIN number once I had established a little bit of credit. Okay. Somebody mentioned, if I can answer, somebody mentioned something about 0% financing or 0% balance transfer cards or something like that. And here's what I would tell you. Those cards are great, but make sure you put in big red letters on your calendar, or have 15 alerts and reminders 2 or 3 days before that thing is due. Because let's say you have 0% financing for 12 months, and some credit cards will give you up to 18 or 21 months. The day after, if you don't pay that balance in full or transfer that balance, you're going to pay interest on that whole year's worth of interest that would have accumulated. So make sure you're paying those things off. I saw it in quick passing. I just wrote down 0%. So
awesome. Oh, this is a good one. I would like to establish business credit for my real estate investing, but the property I own is in my personal name because I was living there when the mortgage was refinanced to really good terms. Don't want to risk transferring the title. If I set up an LLC for the real estate business and the bank sees the revenue from the cash flow, can I establish business credit this way without transferring the title to the LLC?
So that may depend on tax returns, and depending on certain things, banks may request or require your tax returns. In fact, I actually went to increase one of the limits on one of my American Express cards, and they asked me to furnish some tax document. I don't remember what it was. That was the first time and the only time they've ever asked me to do that, because typically I don't do it. I ended up saying, and I tried to furnish what they wanted. For whatever reason, they were saying they didn't receive it. Instead, what I did was I took one of my other cards and I just moved the limit, because I never used that card. I just moved the limit over. But as far as, you know, sometimes you want to consult with an accountant. I'm not an accountant. I don't claim to be an accountant. I understand how credit works. If you report that income on that house to your tax returns, that may get passed on, so that, you know, the bank or whoever may be able to see that. That might be situational or circumstantial based on, you know, your situation.
Awesome. Thank you so much.
Mm-hmm.
I'm just looking for a few more questions here.
All right, I'm going to somebody just said something. I heard you can erase those inquiries on your personal credit. Here's what I'm going to tell you. The first thing is this. You're going to see a lot of people say you can erase inquiries. If you applied for a type of business or a type of credit, business or personal, but if you applied for a type of credit and you did not get that account, yes, you can have that removed, especially if it's like within the first 24 or 48 hours. Excuse me. If you apply for a business line of credit, whatever, through any bank or whatever, and you get that line of business or that line of credit and you dispute that inquiry, they will shut that down, which is a double negative, because now you have the inquiry, but you shut that account down. So now you lost that account that you were approved for, and the bank's going to flag your account. So if you do apply for any kind of credit, do not remove that inquiry. If you did not apply for it, or let's say you went to a car dealership and they ran it through 10 different banks and you only got your loan through Chase, those 9 other banks, you can remove those inquiries. That's fine. But just be careful about removing inquiries. There's a lot of people that say, pay me $250 and I'll get your inquiries removed. And then I've heard they shut down their accounts and they're like really pissed off. So just be careful with that.
Here is another good one. So what if you have more than one business and thus more than one EIN number? How do you have a business card for each one?
Yep. Each one's an individual business. And again, this is something that I'm starting to learn about. I highly recommend not only people having LLCs and you know, their own businesses or each individual business, start investing in trusts. And this is something for you and I both, you know, for me to learn. Have a trust and then have everything through the trust, because all you're doing is creating more and more shelters for you, for your businesses. God forbid something, you know, fails. God forbid you make, well, God, hopefully you make a ton of money and you want to shelter yourself as much as possible from tax purposes. I am all for people paying their fair share of taxes. I am also for people keeping as much money as they possibly can from what they've worked really hard to earn. So I wanted to answer this too. I'm 41, never had a credit card, and my homes and vehicles are paid for because I never know when money will come in as a wholesaler. So here's the advice to that. Cash. If anybody doesn't know who Ray Dalio is one of the most successful investors in the United States. And he's got 2 phenomenal books. And I don't remember the name of the last one, but it's one that just came out in the last year or so. He says cash is trash. I'm sorry?
Principles. I'm pretty sure.
Ray Dalio Principles. I think that is it. Phenomenal listen, phenomenal. And one of the things I learned from Alex Hormozi, if it's a really good book, get the audio book and the regular book so that you can listen to and read and look at the graphs and all that stuff. But Ray Dalio says cash is trash. And the reason for that is this. Number one, cash isn't earning you any money. Unless you're getting a 5% discount, you should never be paying with cash. And the last thing is, with regards to cash, cash is only good when you're getting a discount because it doesn't build your credit profile. So if you're getting a 5% discount on something, fine. But a lot of times you're going to get the same discount, or you're going to get some sort of other benefit by using a credit card. If cash is the same price as credit, you should never be using cash. And that's just one of the biggest lessons that I learned, because so many people still think, oh, cash is king, and they walk around with, you know, $500 in their pocket. It's like, well, that's great, but that's not earning you a free trip at the end of the year.
Got it. Oh, this is so good. We still have so many more questions. We might have to bring
this thing
back.
Has been going off like crazy. I mean, I'm assuming.
No, this is great. Well, I just want to say thank you. We're at 1:50. We may have time for one more question if we can go right to the top of the hour. Okay.
Want me to just run through like quick questions, like, and just give.
Yeah. Let's.
All right. So I'm gonna just. What type of trust do you use? I have no idea. This is what I'm trying to learn on. So, Jeannie, if you figure that out, please let me know, because I'm interested. Changing World Order by Dalio. That is definitely it. Principles was the previous one. Awesome. Let's go back up here. If you take out credit cards using your business, but it reports on your personal credit, will that affect your personal? Yes. So if you have a business credit card, but it's reporting to your personal, that is absolutely going to affect you personally. So make sure you're careful about that. That was the inquiry. Creating an LLC by yourself is super simple. But if you're going to have a complex business, yeah, that's where you want to definitely seek some sort of accountant or somebody like that. because that's really important. At what point are you able to get credit with a business EIN alone? So that's going to depend on the different types of lines of credit that you have, Carla. It depends on the bank too, what kind of establishment you have. Typically, I'm going to say you're going to need a minimum of 6 months to a year to be able to just purely get EIN alone. How critical is choosing the correct industry designation for DUNS? Oh, Renee, that's a phenomenal thing. Depends on your business. And I forget what it's called. There's a special number. It's like some sort of code. It's some sort of code that goes with your thing. So for example, with regards to credit, the credit repair industry is the #1 chargeback category of all payment processing. My actual business name is 3-Digit Consulting, LLC, because if I had the name credit anywhere in it, I would not get approved. Plus, when you look at my business structure, I am registered as a consultant, not as a credit anything. So that is a really, really important thing. When you're doing that, make sure you do some research. Ask the bank, because the bank's going to be able to tell you that depending on what your business is. Just say, hey, are there any things that are alarming? And make sure you think about that before you create your LLC and you file your name. Make sure you absolutely understand what industry or what code that is going to register you as. Can I get my LLC and EIN number online? You can. You could do it. It's relatively inexpensive. Some people, they'll say go to LegalZoom or, again, an accountant. Some people are going to charge you a lot of money. Like, don't ever pay $1,500 or anything like that. You don't need to do that. And you can kick me off when I'm done. Can you establish business credit on real estate cash flow? The property title is in your personal. Can you establish business credit on real estate? That's a good question. I think, well, if it's in your personal name, unless it's actually reporting to your business, you're not going to be able to build cash in your business name because it's essentially going to you personally. What was the other thing? All my credit cards at 0%. Is it okay if I pay minimums on those? You can pay minimums on 0% balances as long as you pay that thing off in full. Okay. And here's one of the other things I'll tell you with regards to credit. To maximize your score, let's just conceptually say you have 5 cards. Only keep 3 or 2 or 3 of them that have a balance that report. You want to report 0 balances. Like if you look at the 20 some credit cards I have, probably like, I'm going to say 8 or 10 of them have balances. All the rest of them are 0, 0, 0, 0, 0, 0, 0. That's really important. What does MR and UR stand for? MR is membership reward points with American Express. UR stands for Ultimate Rewards, which is Chase.
All right.
Go ahead.
Ryan, this is
Sorry,
so
I
good.
can just keep rapid firing all day.
I know. Well, if you don't mind throwing your website in the chat, so maybe people could want to reach out to you and ask questions, I think that would be great. So I did see some people asking for that.
Okay.
So I just want to say big thank you. I've learned so much, and clearly this is a big meaty topic that we all want to talk about some more. So I'm going to talk to Liz and Andressa, see if we can have you back. But just big thank you. Another plug. Everyone who's watching InvestHERCon, we're going to have amazing speakers, amazing lineup. Just go to the realestateinvesther.com and get your ticket now, because we are going to be, tickets are selling fast. So really, you want to make sure you reserve your spot. This will be recorded. You're automatically going to get the replay in within 2 days, because I know I need to rewatch this and just absorb everything that I just learned. So thank you. Just really appreciate having you on, Ryan. Thank you.
You're very welcome, Tessa. Thank you. And I am really interested in this InvestHERCon. So
yes, you have to check it out too. Also, I don't know if you saw, but when you said you got married, everyone was saying congratulations to you in the chat.
Oh, I didn't see that. Thank you. Yes, I'm 45 years old. I took the long scenic route, but
hey,
I did marry a beautiful woman.
There's no race.
Who's awesome. She has 3 kids. So now I'm a husband and a father at the same time. So,
and they're going to have great credit scores. I'm sure
they're going to have amazing credit. They don't like my discipline, but that's how you get the good stuff. So
yeah, that's right. Build the habits once a week, check in on your numbers. Lots of awesome takeaways. Bye everyone. Make sure you
have a great day, guys. Thank you so much for your time.
Bye.
Bye.